Welcome, Tradespooners, and let's take a look at January 31st, 2014. We're looking to short Mosaic Company. MOS is the ticker symbol. Let's take a look at the risk-reward rating from Tradespoon. And we come in at a 3. We also have the value momentum at a 3 as well, so we're on the lower end of the scale. And as always, you can go in and dig deeper in the fundamentals and technicals here of today's pick, short Mosaic MOS. Let's take a look at the price action, the volatility, the risk, return on capital, the probability of success, and the estimated move. The current price of Mosaic is $44.93. That was as of close of business on 1/30/2014. We see the 52-week high is $64.65, and the 52-week low is at $39.75. We have the implied volatility about 25% higher. And if the stock does get any more volatile to the downside, you could see this potentially peak up. And always, if we're coming into a fundamental event like earnings, we'll check that out in a minute, that could potentially move implied volatility even more, but it is up off the lows of about 25%. The return on capital for the positions that we're putting out there, specifically the option positions, is around 140%. The probability of success is coming in at around 65% at this juncture. We have the estimated move going into February expiration. February 22nd is the expiration of the options we're going to talk about today. We have that estimated move coming in at 220. And as always, if you are wondering how we came up or need an explanation of these different calculations that we made, please hover over the question marks. Let's take a look at today's picks. The stock trade, we're looking to sell short stock, MOS. We're putting in a limit at $44.93 or better. Now the target gain on this is going to be $6.20, which means that we will put a buy to close at $6.20 lower than our entry price. So in this case, you're looking at roughly around, let's say, $38.70. You're also going to put in a max loss target, and that is just to cover your losses and get out if, in fact, Mosaic starts to go up. In this case, you're going to put a buy stop limit, and we're going to put that $6.20 higher than our entry price, which would roughly get us out at around 51 bucks. So you'd put buy stop good until cancel. Now, again, we suggest that you use only 3 to 5% of your buying power or cash available in any stock trade. In the options trade, we're looking to buy the February $45 puts, and we're going to put a limit price of $1.37 per contract. That's $137 per contract. Our profit target is going to be $1.37 higher than our entry price, which would get us out right around that 270 mark. And so we would put a sell limit roughly around $2.70, good until cancel. Our max loss, or our risk that we're going to take on this trade, is going to be the premium we pay for these options, which is $1.37 or $137 per contract. Now, be aware, you have to be very strategic about your sizing. We're suggesting anywhere from 2.5% to maybe 10%, and I say 10% for you smaller account holders. Remember, the more you put into a position, and if you take a loss, the harder it's going to be to get back if you size too large. Now, taking a look at the option spread strategy, we're looking to buy that purchase in February $42.50, or selling the $42.50 puts, selling the $42.50 put, 50 cents. That reduces our cost basis to 87 cents. So we'll put in a limit to buy to open this $2 put spread, 42 put spread, buying the 45, selling the 42 puts, and we're going to do that for a net debit of 87 cents or $87 per contract. Our target gain is going to be $1.30. So roughly we would put in an order to sell to close this bear call spread. Okay? We're going to put it in for $2 and roughly 20 cents. So we put a sell to close at a $2.20 limit, good until cancel. We're willing to risk all 87 cents for purchasing this put spread. Okay, and again, if you have never traded one of these strategies, or you're looking to just develop not only an understanding of how these particular positions and strategies work, but also work out your risk, use our proprietary Tradespoon. Now, taking a look at the stock action, we've seen that the stock has had a nice run up until the beginning of this year and has been on a downtrend. which is trigger why we're looking at a potential bearish position here. Now, as I had mentioned, volatility has been on the move, and we can see here any of the fundamental events. And as we know here, Mosaic earnings on 2/11. Now, you want to check that date with your brokerage firm, but they are scheduled to report on 2/11. And so we volatility continue to move. And as news, you can click on here and see any news and commentary that is out as we are putting this recommendation. And if you look again here on one of our partners, Trading Block, we're looking at volatility implies what we're focused on. That's the volatility of the options. And we see that its low right here was 17. It's currently at 28. So you're seeing a nice spike in implied volatility, well off the high of 2013. Keep an eye on that to see if that spikes up, and meaning that there is actual movement in the underlying going into earnings. Well, as always, if you have any help, you can email us at info@tradespoon.com. Track performance. All right, S is the ticker symbol for January 31st, 2014. Next time we'll talk, it will be a new trading month, and hope you have a great trading day. Take care.